Tuesday, 12/10/2019, and we are here live on our YouTube channel. It's Tackle Trading's Halftime Report. We've got a full crowd here today. We've got producer Cody in the background, as always. Matt, myself, Tim, and Noah is joining us from Tackle Trading. All the coaches are here to break down the markets and talk about what's going on there and have some fun while we're doing it. Couple of quick notes as we always get started. I got to work from my checklist, and I got to work through it one step at a time. If you're new to our channel, subscribe, click the bell, join us every day. We go live at 12:30 Eastern every day that the markets are open. And if you are a veteran of our channel, welcome back. It's always great to have you guys. Hashtag Team Tackle is our standard hashtag we like to get out there, and join us. Make sure that you're a pro member. We've got a 15-day trial in the link in the comments below, and Cody will always drop that link in the chat. Maddie, how you doing this morning?
Tim, doing absolutely fantastic. Excited to be here with the crew.
So am I. I mean, there's not a lot going on in the markets today, but one thing I've always said is even on a boring day in the market, if you're a trader, there's all kinds of things you're supposed to be doing. Just the volatility is lighter. And I actually prefer light volatility days in many ways, Matt. I like my, lazy account. Just go through a step at a time, run my cash flow, update my watch list, kind of run the account. I don't need fireworks every day. On a flat day in the market where there's not a lot of action, how do you approach it from a mindset perspective?
Well, I mean, there might not be a lot of action in the actual market indexes. I mean, they're all pretty flat here, kind of waiting on the Fed and waiting on some other news coming out later on this week. But even though it's been a slow day in the marketplace from an index, it doesn't mean there's not individual components that aren't setting up for really, really good trades, right? I mean, there's a couple stocks setting up on that option report on the buy side, waiting for potential breakouts, reestablish triggers. But even on a slow day in terms of the market, I don't think it's a slow day in terms of the news. There is tremendous amount of news that obviously we're going to go through from, articles of impeachment were drafted from the House today. It looks like it's going to go to the Senate. You had the Wall Street Journal reported today on trade basically being delayed on the December 15th.
Mm-hmm.
And I think the big one, well, the two big ones I think that really kind of stand out to me today was the USMCA deal that finally gets agreements through the Democratic leadership at Congress. And it looks like that deal is officially going to replace NAFTA starting immediately. So that's number. And then you had the National Defense Authorization Act that kind of got passed and didn't get a lot of news, but I think that's a big deal. I mean, we're talking, Congress approving $738 billion in the budget for 2020. So, even though it's a slow day in the market from a price action, a lot of news we need to talk about.
Let's talk about the impeachment stuff first, because although, we're here to work down the markets, I mean, politics play into this. There's no doubt about it. Trump's Twitter account is one of the biggest market indicators we have. Anybody who's been around us long enough knows we talk about this stuff and we're not shy about it because it has to be analyzed. There's no doubt about it. Matt, I got to get your perspective on this. I mean, you actually were in Congress as an intern when you were a law student. You spent time studying the Constitution. You spent a career watching markets and broad macroeconomics. I think you've got some insight into this that might be very, very relevant for everybody out there to hear. How do we approach this as an investor and a trader? I mean, the president is now having articles of impeachment on abusive power and obstruction of Congress being drawn up. Big news, no news, little news. How do we break it down?
It's big news from a political perspective. It's not big news from a market perspective. The market does not care about this because let me put it like this. I think we need to be patient, not overreact, and let the process play out. Impeachment is not a legal situation. Impeachment is a political situation, and you have to watch and see how it plays out. Now, do I think the Democrats went a little too far from obstruction of Congress? Absolutely. You can't have obstruction of Congress until you have the judiciary, kind of comes in. So I think they overreached there. The one I'm interested in is the abuse of power. I think we got to wait and see how that plays out. But me, and I think everybody in the market and everybody in politics, I don't believe there's a conviction coming. And if there's no conviction coming, then what's the market going to care about?
Mm-hmm.
Let the political process play out. I don't think the market responds to it negatively or positively.
I still think there's a 0.01 delta that he could be convicted. I do think there's a chance. I think there's an outside long shot kind of black swan type of thing that could swell up. I mean, we were talking politics.
New information has to come out.
Sure, but we are talking politics.
And that can't. By watching and letting the political process play out, new information certainly can come out. I mean, the impeachment of Richard Nixon, it wasn't until a Supreme Court basically said that he had to basically, turn over the tapes to Congress that finally he said, okay, enough's enough and I'm going to resign. So can more news come out to see how this plays out? Maybe, maybe not. But as of right now, I don't believe the market cares about it.
I'm going to bring in Coach Noah on this one as well. And Noah, I know that, politics is something you pay very, very close attention to. And it's just 2019. I know it's a sensitive topic, but you're a market analyst. You're an expert at this stuff and you pay attention to this stuff daily. What's your read on it? Do you agree with Matt that it's more of a political issue, not a market issue? What's your take on the whole thing? As a trader?
I definitely agree with Matt. I think if you're looking at it from an odds perspective, like even with your 0.01 delta, yeah, there's a small chance, but I don't see it coming. It does seem more like posturing and grandstanding to me. And the market obviously hasn't had big reactions. It's been paying closer attention to the economic data. If you look at what's been driving the market up and down recently,
yeah,
PMI reports, jobs reports, you got the FOMC. That's probably a bigger deal this week, even though it's not a big deal this week.
I would agree. No, I was actually going to say the exact same thing once you were done. Is if I'm looking at this week and articles of impeachment are being released, and I got the Fed meeting on Wednesday, I'm much more interested in the Fed meeting on Wednesday, because I think the Fed's obviously not going to do anything, and we all agree with that. But I want to see what that language is, and I want to see how they're kind of approaching the quantitative easing, or non-quantitative easing. But I want to see how they're approaching 2020 to see if we can get a read on 2020. The Fed's been a little tight-lipped on what they're going to do with the interest rate policy. They were far more transparent in 2016, 17, and 18. They've not been nearly as transparent for the last 3 months. So it's going to be interesting, and I'm much more interested in that. And I'm much more interested in the National Defense Authorization Act, and I'm much more interested in the USMCA announcement today as well.
Yeah, I think all those things actually have much more of a market impact. There's no question about it. But one thing I do love about trading and investing is it does pull you into conversations about this. In fact, I think it's one of the things that grabbed me from early on, Matt. The number one thing is I wanted to make more money as a trader. That's kind of why I got into this business, wanted money. But the number two thing is the fact that you're talking about oil and you're talking about international economics and all the things that grab my brain. So I'm going to continue to stay focused on it, just like you guys are as well. I'm with you. The Fed tomorrow. We got to talk about that. We had to talk about this defense bill. There's no question about it. And look at some of the stocks that may be impacted by it. Those are more short-term things that as a trader, we might be able to actually take action on and do something with. Quick flash through on the markets, Matt. I don't see any difference between the Dow, the NASDAQ, and the ES, but look through them and also finish on the Russell real quickly and give me a read on the technicals.
Yeah, we're not seeing anything different than what we saw yesterday. The market really kind of tested overnight if we kind of dropped the futures market down here. So looking at the futures market, this is the overnight action. And the one thing we haven't talked about yet, Tim, you had some pretty interesting and negative data coming out of Japan, coming out of China
and Germany.
Coming out of Germany on the overnight action. And that overnight action really kind of saw the market sell off about 30, 40 points coming into the cash open. I believe the Dow was down about 110 points. The S&P was down about 20 points from and then the cash open happens and you open up the casino and the casino starts buy and just kind of recovers. There wasn't a lot of economic data to support it. You just had a little bit of a run up coming back up into resistance on the cash open. So negative economic news coming out of the Asian and the European markets. And, Cody and I were talking about that, in the pre-production show. And I mean, basically, it's just what we saw last night on the European and Asian numbers was basically just the same story being told in a different way over the course of the last 18 to 24 months. We're seeing slowing growth from around the world. We're seeing, inflationary or deflationary numbers coming out of China, negative 1.4 on their PPI numbers just last night. So it's just that same story we've been seeing over and over and over in the marketplace. So that's kind of one of those reasons why the market was selling off a little bit. Market recovers in the morning kind of dash that the market opened up at 9:30. Looking at the NASDAQ here, the NQ contract, same type of storyline, tested on the overnight, Tim, came back up, recovered on the cash open. Same thing we were looking at on the Dow. There's no discernible differences in these chart patterns at all. And then you have the Russell 2000 here, which is trying to play catch up. And even on a day when, the market's struggling, it tested that 9 EMA, caught some fire, and it's retesting those resistance zones. And if you want to take a look at where those resistance zones are, you're really talking about 1640. Right there at 1640, maybe the breakout at 1638, but probably confirmation above 1640. Keep an eye on 1640 on the Russell 2000 this week.
Well, and it's riding the lightning there. I mean, it's holding the moving averages, holding the pivot point relationships, higher pivot low there, equal pivot high, but another breakout, Matt, take another leg to the upside probably would be a high probability move there. Russell's showing me.
I'd say 1700, Tim. I mean, if you break out at 1640, you're going to have to pull this on a weekly chart to kind of see, any of those resistance zones, but there's not a whole lot of resistance that really stops it. Maybe you have something right here, right there at about 16. Well, that's right there at about 1640. You break that 1640, I'm not seeing anything till 1700.
Give me a peek at FXI, if you will. I just want to talk about trade war real quick. There was another announcement here today that they expect a delay on the 15th, that those tariffs will not go into place. Do we have to get fake headlines on this topic every day? Because we have no new information.
Did anybody actually believe that was not going to get delayed?
Like, the market's been talking about that for 6 weeks.
A little facetious, but I mean, honestly, that's kind of what we've done. We announce these trade tariffs and then we delay them. So,
so my understanding, the White House hasn't actually
Christmas. Do we really believe Trump's not going to delay that? There's no way.
Cody?
Oh, I definitely think that they will be delayed. What I'm annoyed with, which I agree with what Tim said, do we need the fake headlines? Because we actually don't have any solid news that they're delayed yet. So they're basically reporting something that hasn't been confirmed.
Yeah.
It's all speculation right now.
Well,
now we do all kind of assume. What's that?
Oh, go continue, Cody.
I was like, so right now it's speculation. We can all assume that they're going to be delayed because that's what's happened, historically past 2 years when it's come to any of these tariffs or any of this trade deal. It's just been kicked down the road another month, another 2 months, another 3 months. So we can all speculate with, a good delta on that it's going to happen. But should we really
I got a 99 delta on that one.
I got a 99 delta as well. But I will say this, I think the narrative and the conversation around the trade war and the tariffs, I do still think the market is underpricing the risk that there will be a bump in the road sometime in the future. And we are near the all-time highs.
There was Tim, to go on that note, I read an article in Zero Hedge today, and I apologize for not remembering the economist's name, but he literally said just this week that within a very short time period, the repo markets are going to show their bearish teeth, and it's going to cut the market in 10%.
Yeah, okay. I heard that as well.
Yeah, and again, it's coming from Zero Hedge, and we all know what Zero Hedge is and the radicalism that Zero Hedge, but it doesn't mean they're wrong.
Well, and I actually, one of the things that was interesting about that, I didn't see that exact article. I'm gonna have to go find it. But I read something about the repo markets this morning as well, that some of these institutions on Wall Street don't have access to the Fed repo markets. So it's like they're playing this game where some of them have access to that capital and that money, Matt, for the overnight lending, and others don't. I need to get more clarity on that before I start formulating an opinion about it. But I've seen a few headlines on that repo market recently as well. Russell here, I don't know where the upside is totally. I mean, 1750 in play by the end of the year, that would be incredible. 120 points from here, it would have to take off and run and have some incredible news. But we're seeing bullishness, and it's now in the best technical condition we've had probably since last year. Matt, would you agree with that?
I would agree with that. I mean, the breakout of 1600 was strong. The breakout of 1620 was strong. The breakout of 1640. I mean, that's the one where it doesn't have anything above it until 1700. Can it reclaim the all-time highs at 1746 by the end of the year? I'm going to say no on that.
Yeah.
I don't think it has the time to hit 1700, retrace back down to 1660, and then make another run. So I'm going to say no, but 1700 could be in play.
Might be more like a Q1, Q2 target for next year if the Russell does start to move bullish. A couple of stocks I want to look at here: Lockheed, Boeing, and Northrop Grumman, any of the defense stocks. And then I actually want to look at an ETF called ITA, Matt. There's always an ETF for pretty much any idea that you have. And
any idea.
I love ETFs for that reason. Yeah. Yeah, ETFs are great. I mean, the thing about it is before you trade them, though, you got to make sure they're liquid and all that kind of stuff. But Matt, big news for the defense stocks, in my opinion. Whenever you're going to put $700 billion into a marketplace from a government bill, that's a big deal. There's no question about it. Break this one down and maybe take a look at Lockheed and Northrop Grumman. Those are the first two that came
And I'd like
to
to
mind.
get knowing your take on the defense as well. But the National Defense Authorization Act was passed, and in that act, $738 billion for the 2020 budget. Lockheed Martin, this was interesting. LMT here, and we'll come back to ITA here in a second, but Lockheed Martin was basically told, you're not selling F-35s to Turkey. Okay, so they are banned from selling F-35s to Turkey. I took that as slight negative news for Lockheed, but there were other orders within the defense bill that they were selling other planes there as well. What was interesting is Space Force was now the official 6th armed service of the United States. And I believe Space Force is put under the United States Air Force, kind of their, budget and so on and so forth. So it's interesting when you see something like this. I mean, the $738 billion is obviously going to be the headline, right? Because that's a big, big, big number. But it's not that much more than last year.
Yeah.
Right. I mean, what were we last year? About 700?
I think it was a bump up a little bit, a few percentage points.
About
but
a 10% bump up?
I'd have to look it up. But
I don't think we got that big of a bump up this year from last year. So it's not having the impact on the price so far today. But when you see these types of things and let me get Noah's take on it. When you see these types of things, obviously the majority of that money, it goes to military personnel, it goes through pensions, and it goes through, paid, maternity leave and all of that. But a lot of that money is allocated to companies like, Northrop and Boeing and Lockheed. When you see these types of news, how do you guys play this? How do you prepare to take advantage of something like this?
Noah first. I got a takeaway, but Noah, you first.
Well, it's a good question. I mean, if you look at it from like a bigger weekly perspective, you're just shy of those highs at 400 and you've got pretty solid support. This is kind of one of those wait and see for confirmation. I think you need to have a break because it's just right smack dab in between the moving average. And it's kind of put me into more of a neutral posture after all that nice run up.
Mm-hmm.
This is one of those where I just kind of wait and see. I don't try to predict. I just try to react.
Yeah, and I think there's some of that I have as well. I'm not going to disagree with that takeaway. I think that for me, Matt, it's just a reminder to keep Northrop Grumman and Lockheed Martin on my watch list for in perpetuity. It's just that you have this artificial demand because the government's going to spend in these industries, and NOC and LMT are two of the best companies in that regard. Short-term technicals are not great for these two stocks. In fact, there's nothing there that says go out and buy them, buy them, buy them. But I got to tell you, if LMT breaks back above 400, it's a buy. And if NOC breaks above that pivot that it set about 4 weeks ago, it's a buy as well. So it just cements my opinion that I've got two really, really sound, fundamentally strong companies that create a great product that helps our country. And I love buying these stocks. So I don't see a short-term signal. I'm not going to overreact to the news headline, but it does reaffirm my long-term view is my takeaway. And
you are starting to see some reversal characteristics on this short-term downtrend on Northrop, Tim. So you got this, Northrop was on just fire for the first 6 months of the year.
Juggernaut.
All the way to $380. And now you're starting to see a little short-term bearish downtrend. And then you have this double bottom at 340. You have a double top at, we'll just call it 360. So you double bottom at 340, double top at 360, creating a little bit of a W formation. Yeah, you got to trigger above 360 with a pure technical pattern there.
Yeah. And if you're out there and you're watching our show right now, I mean, there's several things that you should be doing throughout the program. Number one is building a watch list on companies that grab your attention. You don't have to grab every stock we talk about. Obviously, we go through all the news, Matt, but it would be very, very appropriate if your team tackle put these two stocks on a long-term watch list if they're not there already. I do like the news and I support it. I think it's a really, really good thing. Good sign that politics is not always infighting. They got something done there. Another one that they actually got done, Matt, is that USMCA deal. And And I thought that was a great story as well here today for the marketplace. I mean, I love free trade, which is one of the reasons why I hate the China thing. And I know that it's a long-term game there. Don't want to get pulled into that again. But this was a good positive for people who believe in trade. They've passed this bill, in my estimation, that now they're opening up those trade deals with Canada and Mexico, right?
Tim.
Yep.
It's a good deal, and you got to give the president a lot of credit on this.
Yep.
Okay. He went after NAFTA. He ran on his anti-NAFTA. It was all around his campaign. He ran on the subject. He attacked it from the very beginning. He got the deal done, and it's a good deal, guys. Dairy access for the U.S. has increased. Access to other agricultural products is increased in the U.S. The auto rules was very important, and we saw now that instead of 62.5% of the entire automobile being built in that country's origin, now that's up to 75%. That's good for our industrial companies. That's good for labor unions. That's good for auto manufacturers and so on and so forth. Tariff side deals kind of get stripped out of the deal. A commitment not to mess with currencies, Tim. So a commitment not to manipulate your currency against the other currency. That's good. Increased protections for intellectual property rights. This is a trade agreement that, as of right now, should be the standard for how other trade agreements are settled. And it could be a path to go for another trade agreement with China. So it's going to be interesting to see how China plays out. But you got to give our president some credit on this one.
I agree. There's no doubt about it. Very, very good news for capitalism here today in that regard, in my opinion. Many companies I want to go through, but I want to go through the dollar and the indexes, or in that index, and then also the commodities real quick first, Matt. Fed meeting tomorrow. We'll talk much more about the dollar tomorrow when we get more of that data, more of that information. $ DXY real quick, if you will. And the chart is neutral at best, guys. I mean, I know that we've got a long-term channel from a weekly perspective, but now we're walking into a Fed meeting where nobody expects anything here. Matt,
No.
Is the dollar just a good neutral play right now? Kind of a carry trade play. I mean, what's your read on the dollar?
It's a day trader. It's a carry.
Yeah.
I mean, that's kind of my read. I mean, we talked about this yesterday a little bit with Cody, but yeah, you can have a day trade trigger type technical setup, turn it into a short-term swing trade, but it's really hard to carry the dollar through a lot of these economic reports. It's almost impossible to carry the dollar through the ECB and the Swiss National Bank, and then obviously the FOMC tomorrow. So, it's tough to carry anything through that from a swing trading perspective. Wait to see the news, trade it as a day trade, or you can carry the positive interest on it.
It looks like 97% of market participants all think the Fed is going to hold tight there tomorrow, not do anything different. I don't know if there's anything can come out of the testimony from Jerome Powell.
What's the other 3% think?
They're probably just hedging. I mean, I've wondered that too.
They should stop predicting.
I want to meet the 1% of people who are short Apple. Like the short float on Apple. I want to meet the 2% of people that are betting against the Fed. I want to shake their hand and say, okay, you just don't care about money or what? I mean, yeah, I guess.
I would venture to guess that it's not the same 1%. Like on the Apple example, it's probably someone coming in for like a counter trend trade and they can pull up. I doubt that it's the same 1%. It's just like Apple's going down. It's terrible.
Right. Somebody's just shorting it as a day trade or something.
I think it's got to be people cycling in on being that short for a short period of time.
Could be. I still scratch my head.
Apple.
No, I mean, there's a lot of companies I could bet against, and Apple would not be the one I would do so. It doesn't mean I'm going long all the time, but I don't know how you bet against a company with over 200 billion in cash and a wonderful product in a strong economy and a strong market that we're in right now. C'est la vie. Crude oil kind of up today, flat, not really doing anything. I think the analysis from yesterday kind of holds pat, Matt. Sometimes, I mean, there's a reminder as to why daily routine is so important, guys. You should be able to look at this crude oil chart, and if you did your job yesterday, it should take you 10 seconds, and then you move on. Matt, there's nothing else here for me, unless I'm missing something. What do you see?
You said as well as I could.
Yep. Natural gas backfilling on the gap on Monday. Until then, I mean, 220 is holding. So that's kind of my line in the sand. I think there's a good pro tip here, by the way. If you're a trader, use the alert system inside your brokerage software. If you know there's a level you want to be aware of, you could put an alert at underneath that pivot point, 214, 220, wherever you want to put it. So it sends you a text or an email. That way you don't have to stare at the chart all day. It's a good way to stay organized as a trader. I do like using those alerts. then ding, 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 send you a message. Then you can come in if you have something that you're paying attention to. Metals market, Matt, commodities aren't doing much here today as we're waiting on the Fed tomorrow, and the whole market's doing that. Gold, silver, nothing really to see there, but palladium, just another public service announcement. Palladium is on absolute fire the last couple of years, hits a new all-time high here today. Matt, that's green candle, like some institution has a computer program running here. Anything to add to this palladium
are we going to
chart?
give the algos credit for driving markets up? I thought we only gave the algos blame when the markets went down. I thought that was the standard Wall Street response. When the markets go down, it's because, the algos are to blame and it's craziness and we got to shut them down. But when the market just goes up consistently, it's just people buying palladium, like literally.
Yeah. I think first of all, my sarcasm radar is on. Noah had me turn it on yesterday. I've got it up and running, and I just definitely picked up on that. Obviously, the algos have the computers running in both programs. They just want to make money, Matt. There's no question about it. Palladium, incredibly strong. I mean, how many green candles in a row is that? Like 20 the whole month? Just green candle every single day for 1% to the upside. That is what I call riding the lightning here. There's no question.
Well, Tim, it's been the best performing commodity for, years now.
It makes me question why I continue to hold more gold than palladium, by the way. It is something I have to debate internally and ask myself.
Precious metal, gold makes us all crazy.
I get it.
Have you ever heard of palladium fever? Me neither.
We can make that a thing.
Plus, gold is a safe haven. Palladium is not.
I know.
Gold is a precious metal. Palladium is an industrial metal. So, gold's the number one protection against inflation.
But I'm human. My greed kicks in. All right. I'm human. My greed kicks in. I'm just like, I look at that.
There's a reason.
It is very, very strong. And, other metals, though, I'm not seeing a lot. Platinum's having a huge day, but most people don't trade it. That gold chart, it has been the same analysis for 3 months. And 1450 is holding. That's where we are. But really, guys, outside of all the major markets, I want to talk stocks. I think the action today is in individual companies, Matt. Outside those major headlines that we broke down, I do want to talk about some of the stocks. And there's many we'll go through, but I want to start with Netflix, actually. I didn't watch the Golden Globes. I don't watch any of those award shows for a long time. Netflix has 2 news stories playing on it today. Number one is they were the number 1 network for Golden Globe nominations last night, 34. I believe. And 34. Their original content is incredible, Matt. Say what you will about the company. I know they've had a rough year, but they still put out a good product. I use Netflix all the time, but then they also got to downgrade it. Matt, give me some analysis on this stock.
It was interesting because the fundamental concern for Netflix, and it has been for years now, is can they achieve original content? Because we all know that the other streaming services are taking back their content. We all know the Office is the number 1 streamed show in the history of the world, and it accounts for a tremendous amount of Netflix. So we all know they're leaving it at the end of 2020. They're going to lose Friends. They're going to lose these shows that mean something to Netflix. So they had to come up with original content. And if you can't say that they've figured it out after they led the Globe and Globes, and I'm with you, Tim. I'm not a TV expert. I don't know anything about that stuff. I haven't watched an award show since I was probably 20. That's
it's not my thing. Yeah.
I'm not that demographic.
Cody likes to watch it for the fashion.
There you go. Cody's a red carpet type guy.
I do. I got to see what they're wearing.
You got it. Yep. I like it. But with 34 nominations, that is a win for Netflix. No doubt about that. The gap down happened on the downgrade from JP Morgan. So JP downgrades Netflix. Obviously, that's going to come down. I still kind of like it here, T. I know it's not a clean technical situation, but I think the downgrade was an overreaction. I think the gap down was an overreaction. You got to reclaim some of these moving averages, but I would still keep Netflix on the watch list.
Pull this back big picture for a minute, because this is why I'm so interested in this story. I mean, obviously Netflix has fallen out of favor with the market the last couple of years, but let's not forget, in a 10-year window during this bull market, it is one of the best performing stocks of this size or higher. There's no question about it. It's been a juggernaut. Where my head goes, Matt, when I see that they've got all this original content, like you're talking about, I'm not a TV expert in that regard either, but I know I still use Netflix. Is it possible the market has slept on this stock a little bit and kind of it's got the chance to play some recovery here?
Well, just to give some of that some context, in the same time frame, Netflix has went neutral. Apple has up, what would that be, about 60%?
Yeah, something like that.
You know, looking at Microsoft, same thing. Looking at Disney, same thing. I mean, so can it play catch up? Yeah, yeah, absolutely, it can play catch up. But where do you see potential triggers outside of just short term?
That's a tough one.
That's
I mean,
where I struggle with this one. And that's where I struggle with Netflix on this one. But it's not just that for me. For me as well, when you're looking at the investment, we're still, even though Netflix has went neutral for 2 years now, Netflix still has a 99 PE ratio.
mm-hmm.
It's still, even with Apple doing what Apple's doing, right? Apple's PE ratio currently 22. Disney's is 22. Microsoft, and these are companies that have been far outperforming Netflix, and Microsoft has a 30 PE ratio. So when I'm looking at this and I'm saying, can it play catch up? Yeah, it can. But if you're looking at Netflix from a fundamental perspective, and you said, hey, Matt, if the analysis was, Matt, what do you think about Netflix on the Tackle 25? Okay.
Mm-hmm.
It would take 2 seconds to get vetoed because it's still fundamentally overvalued. So can it? Yes. Will it? I'm not sure.
Noah, is that a symmetrical triangle long term, or am I trying to see something that's not there?
Oh, I could draw some lines on there to make it look like a
if you
symmetrical
just
triangle
cross
for
it
sure.
out.
No, I said no, but it is inside consolidation because it's got higher lows and lower highs. So I mean, yeah, it fits the pattern without a doubt. You know, will it behave like that pattern? If it continues to consolidate and come into the point of that triangle, you'll see a break. But
Mm-hmm.
how much of a break becomes kind of the question. And again, it's not exactly textbook as pretty as you'd see, but it's certainly not wrong.
I mean, Matt, it's a long path to where you're going to call that a long-term bullish stock. There's no question about it. I mean, even technically, maybe a break above 350, even a 300 break. I mean, you're going to be running into other levels there. You know, there are plenty of ways you can play a short term, by the way.
But that's where it becomes difficult, though, because you take what we were talking about with the Russell 2000, right? Breakout of 1640. There's nothing till 1700. But every time you try to break something, you're going to run into something else real fast on Netflix.
Mm-hmm.
I just feel like, yeah, we can bottom feed at some point, but wouldn't you rather take a stab on work?
For sure. That's,
you know what I mean?
Yeah.
I mean, if I'm looking at it from that perspective, I'm saying, okay, I got a double bottom, double top type situation after a very consistent downtrend. You're reclaiming all the moving averages, and you have a ridiculously easy trigger right above 23. Mm-hmm. So I look at that. I'm saying, okay, Netflix is an opportunity. It can play catch up based on the positive news that came out of the Globe and Globes in the face of a JP Morgan downgrade. Maybe, but I'd rather take a stab on something a little more technically sound.
It's going to be interesting to see if Netflix can crawl out of this consolidation here in 2020 as we move into a new year. Let's keep breaking down the markets.
Netflix can fly.
Oh, they can fly. If they want, if they go bullish, they can fly. Yeah.
Netflix can absolutely fly. I mean, we are talking about in 17, the first 6 months of 17, this is a stock that went from 190 to 420. Mm-hmm. So Netflix can absolutely fly. But what was the difference on that? The difference on that is you're breaking out of resistance at 200 and there's nothing there to stop it.
I don't know. I think maybe the difference is institutions bought into the narrative. See, these high PE ratio stocks, it's if people believe in that future and that future growth, they're willing to run it. And I agree, technically, I'm not disagreeing with the technicals there. But for some reason, people have stopped believing in the narrative that Netflix deserves to have a high PE ratio. They just think the competition with Disney and all the other things, all the other stories that have come in this year, I just don't think investors are willing to pay where that PE is, Matt. That's my personal take.
Well, I'm not.
Yeah. Yeah.
I mean, I'm willing to bet you're not.
No, I don't own it.
I'm willing to bet Noah's not. Nope. I'm willing to bet Cody's not. I'm willing to bet Team Tackle's not. You don't make a long-standing career in investing by paying too much money.
Mm-hmm.
right? And that has nothing to do with Netflix's price at 328. It has everything to do with Netflix P ratio at 99.
Yeah, obviously good news from a production standpoint. Still complexity in that company's fundamentals and financials. We'll come back to it over time. Nintendo, Matt, NTDOY. It's Christmas time. You know, gaming systems and games. That makes me think about this. Nintendo had big news. They started selling their Switch in China, and from what I read, the numbers are big. You actually have a Switch, I believe, and you and I, we love games. We absolutely love games. Uh, Huge news, big move on the stock. I wouldn't trade it up here, but give me some analysis here, Matt.
Well, the reason that there's a clown behind me is because I lost a game to my 10-year-old daughter on the Switch last night, and this was my punishment because she's obsessed with Pennywise. Now, the news is very simple. Okay. Let's see. Nintendo is now selling in China the Switch.
Yep.
And the Switch is a very, very popular gaming console. Extremely popular, designed well, great product, all that jazz. I not only have one Tim, I have two, so that me and my son can play Diablo together. So in terms of this, I think it's massive news. And obviously you're breaking out of all-time resistance. You're overextended. I certainly would not chase the dragon here. Wait for it to come back down and form a retracement. But I do believe if this is a stock you like, get it on a watch list and wait for a retracement.
Yeah, heading into Christmas with some of this momentum and whatnot. Obviously, there's some interest here. Other companies, Aramco, obviously, they are going public here tomorrow. I'm starting to feel very bored with this story, Matt. They keep talking about day over day. Just get listed for crying out loud. I don't know what it's going to mean for markets. I have no idea. We'll wait and see if there's anything that it means for markets. I'm gonna
put a prediction out there. Nothing.
I don't think so either.
Nothing.
But it's in the headlines every single day, it feels. Got a bunch of other companies I want to look at that had earnings roundups, Matt. AutoZone, actually one that we've looked at in the past. AZO had a great report, 5.7% up at the open here. It looks like they're holding most of that. Better than expected sales, Matt. When you see a report like that breaking out of a triple top, pretty strong one.
Yeah, pretty decent little earnings report here out of AutoZone as well, Tim. First quarter, November 2019 earnings came in at $14.30 a share on revenue of 2.8. That beat the estimate of $13.69. So a real good beat on earnings per share. And that's really what the news is here today on AutoZone is they destroyed earnings per share. Revenue came in line at 2.8, but with that pretty good beat on EPS numbers, you're going to see 95% of the time, you're going to see the market go up. And that's what AutoZone is doing here. Gap, kind of hard to read at this point. Look, breaking this down from an intraday perspective, you see the gap on the overnight. Here's the cash open right here. On the cash open, it starts going up and then it just kind of fades back down into the gap out range at 1240. So a little difficult to read on that gap. But at this point, you got to call that a breakaway gap, Tim. You got neutrality coming in over the course of the last 6 months on AutoZone. You break out on a strong earnings report. Maybe you wait for the gap fill. Maybe you wait for a retracement or a breakout from an intraday perspective. But definitely watch this candidate on AutoZone.
Yeah, that goes right on a bull watch list for me. There's no question. I don't want to really chase that gap like you're talking about, but you could even day trade that.
It's a tough one. It's a tough one to read when you don't have a consistent intraday trend that kind of follows in line with the breakout. It becomes difficult. It's okay. Stay away for right now. Wait for a setup, but it's definitely a watch list candidate.
One of my favorite names of a company, Mongo, MDB, up in the morning here on a beat of their EPS numbers. And it did not hold here, Matt. Very different read on a gap here because it tried to gap out, but then the intraday failed and it's come all the way back down. The price action overnight was bullish. The price action after the cash open is bearish. How do you analyze something like that when you've got this huge red candle that is encompassing all of the candles from like the last 5 days?
Easy. It's a complete stay away.
Yeah.
I mean, unless you're playing the momentum on the downside and you're looking to break intraday support levels, but I think there's better trades out there. It's a tough read.
Toll Brothers, TOL, one of our favorite housing stocks, actually pays a nice dividend. It did gap back down into the range. This is more of a dividend long-term cover call play, which is why it's a tackle 25 stock. I love this company. I love the neutrality of it. One reminder for everybody out there, if you're trading cover calls, neutral is just fine, Matt. And so when you've got a neutral range like that, it's actually just okay to play it that way. I still like the company.
I can't tell you how many times in my trading that I've said to the stock, because you know how sometimes you can just talk to your stocks, right? Be a little chart whisper. And I can't tell you how many times the stock's been going up in a cover call. And I'm like, just stay neutral. Just go back down just a little bit. Stay neutral.
When you chart whisper, or is it mostly positive sweet nothings, or is it real negative?
No. Let's throw that out to the truth.
Well, there's chart whispering and then there's just chart yelling. So,
I think I'm a little aggressive.
Oh, I've screamed like I'm yelling at an umpire at a chart before.
Don't yell at the umpires. Okay.
No, he yells at them on TV.
Yeah.
On TV.
Yeah. First of all, Cowboy fans complaining about the refs is one of the biggest cliches in the entire market. I know you guys are a bunch of snowflakes down there in Texas, but don't get me started.
Trying to trigger me, guys. He's trying hard.
Them there's
liberal man
words.
himself calling the state of Texas snowflakes. Wow.
I love my state of Texas.
I am gonna cut that audio and I'm getting that on Twitter.
You should do it. But I love Toll Brothers here. I mean, first of all, I love post earnings plays for many reasons. One of the things I love about going through the earnings every day, Matt, is that this gives me opportunities to add new entries. You could make an argument here that if you're waiting to add shares of Toll Brothers and just waiting for the volatility to come and go, you could buy it here today as support. I know it's not a perfect technical trigger.
If you're doing it long term,
if it's a long-term investment,
If you're planning on doing covered calls, that's it. When you're doing something like the covered call, and I've given this analogy before, but you're playing zone defense. When you're doing like a swing trade or a day trade, you're playing man to man. Okay. So in terms of this, as long as you're in the zone, as long as your trend's intact and you're comfortable with it, you're fine. Toll Brothers is a really good company. The housing home building stocks have done pretty well year to date. Obviously, they haven't been performing like technology stocks, but that's not what they are. They're value stocks. They're not growth stocks. And so it's one of those plays that, you can come in, pick up a quality home builder. You can say, okay, and I haven't analyzed this, the P ratio on this one for a while. So let me kind of see where that is. It's got an 8 P ratio against a 13 5-year average. Coming into the trade tab, let's go to 38-day contract, sell that 39 delta, bring in about $80 cash flow, $85 in cash flow per contract. Yeah, I mean, you're not getting great returns, but you're going to get about 2% ROI on that.
2% cash flow plus the dividend, good neutral stock with a low PE ratio, consistent fundamentals. I mean, Matt, this is Tackle 25 101
this
right
stock's not going to drive you crazy either.
No, that's right. I
mean, sometimes scale is weird, but this looks volatile. It's got $2 ranges.
Mm-hmm.
Okay, it's just got $2 ranges. Netflix has big time ranges.
Oh, sure.
Big time ranges. So, yeah, Toll Brothers. I didn't earnings numbers on Toll Brothers though.
They came in line, but their guidance was off, I think, and so the stock gapped a little bit. 2% is within, or 3% is within the MMM move. Well, no big deal to me.
Yeah, we usually have a home builder on the Tackle 25, right? Whether it was Toll Brothers or DH Horton in the past. Mm-hmm. There's nothing I've seen year to date to even remotely even consider removing Toll Brothers.
It looks great.
The only discussion we'll have in the Tackle 25 when we get prepared to release that coming at the first of the year is, do we add DH Horton or Toll Brothers or KB Homes or one of the other home builders that we think is fundamentally a little better, right? Mm-hmm. But even if we do remove Toll Brothers to add like a DH Horton, it's not an indictment of Toll Brothers.
One of my favorite things we do every year, Matt, is that Tackle 25 list where we put all that work into the fundamentals. Then we have that process, you and I and the coaches we work through. It's one of my favorite things coming up here pretty soon, right?
I started laying the initial groundwork yesterday for the review of the current edition of the Tackle 25 to determine which stocks are going to, stay versus which stocks are going to go. The Tackle 25 performed really, really well so far year to date. Really, really well. Now, obviously, that's going to be the case when the market is doing what the market is doing. But so it's. I don't think we're going to see a tremendous amount of turnover, but there will be some.
You never know, man. I mean, here's the thing. I'm going to go hunting for those.
The difference might be on the dirty.
That's what I was going to say. The DSM list. I'm going to go hunting for those stocks because companies like Slack, which we looked at yesterday, or Zoom, or even Lyft. I like what Lyft is doing right now. I like that reversal there. Yeah. So there's going to be some turnover one way or the other. And I love the process of going through that. And I think it's just a good reminder for our crew out there. And if you're watching our show right now, just type in Tackle 25, Tackle 25. If you've not gone through that course, make sure you make it a priority before the first of the year. Okay, that's number one. And if you've not perfected cover calls, go back and review the course. Make sure you understand the management part of it. We've got a mastermind group on that tomorrow night, Matt. We do that once a month, so definitely appropriate content.
And Tim, our community doesn't just do covered calls on those lists. Mm-hmm. They'll do naked puts to boomerang trade. They'll do credit spreads. They'll do other types of cash flow strategies on them as well. Because if it's a good covered call stock, it's a good naked put stock, it's a good bull put stock.
Mm-hmm. Yeah, I'm with you.
Those three are all very similar.
By the way, Starbucks and Garmin on the Tackle 25 today are both looking pretty decent. I do want to get to rapid fire here in just a minute. A couple of stocks I want to look at before we get into rapid fire. Tesla, Matt, we've got to bring this one up. Starbucks, isn't that a beautiful reversal on Starbucks, by the way? I did like that.
Too.
Yeah, starting to show some characteristics. Little breakout there would be a nice trigger in the short term. Good covered call stock.
80, I'd say call it 88.
And I like Garmin on the list, man. I went through the list today, and I thought Garmin had some good characteristics up here. A breakout at 100 would be short-term tradable, but just been a great performer since we added it earlier in the year. Yep. Tesla, last one I want to talk about, then rapid fire. Guys, are we missing something here? Because
I am.
I must be. Noah, I mean, we made fun of Elon Musk as much as it gave us so much joy. Maybe the market gods are punishing us here because we were looking at the negative, and obviously there's some positive here. The stock just broke back above resistance in the short term. It's having a huge day, 3%. What's going on, guys?
I don't get it.
Magic. Some sort of chart magic going on there. It's been
There's no
interesting
news.
to watch. Well, I mean, you got like a couple $100,000 in pre-orders and
it could be a short squeeze. That actually is the most logical assessment that I've heard so far, because I went through all the news headlines, Matt. I saw it at the top of the price volume leaders. I instantly thought, well, there must be an upgrade. There must be some kind of news. Maybe Elon Musk tweeted about how many pre-orders they sold for $100 that are all going to fall through, whatever it is, but nothing. In fact, the only news headline I could find is that China was going to offer a rebate on their Model S, whatever it is.
Last week.
But that was last week. So here we are. We're up 3% on the day where the market is flat on a stock that has had complex news in the past. Does it make you just want to stay away and not touch it?
Well, I haven't touched Tesla in 17 months.
Maybe we're missing out on that truck, by the way. Maybe
no. Cody, you're a real Texan. Tough as hells, grit and grind, badass Texan, right? I had to make sure Tim doesn't get his snowflake Texan.
Badass Texan snowflake? Yes.
Badass Texan.
Yeah, I got kicked out right after that happened, and I was like, son of a.
Cody couldn't even defend himself.
Trying to get my internet back, and it was like,
so in Texas, would that be considered a truck?
Tesla's truck? No.
Yeah.
Maybe some form of like an ATV off-road thing, but no. I did post something on Twitter where it was like the auto control on the Tesla truck, and it's just the truck just running into things.
Oh, I saw that. I saw that going around. I don't know. Maybe it's my bias on Elon and what he did last August that I don't know, but I don't understand it. I don't understand what people are seeing in this company right now.
Yeah, me neither, but I don't want to be the old guy that gets stuck on an opinion, and I'm fully well aware that I might just miss out on a move here. I know that I will. I'm not going to buy the breakout if it broke out. I just don't trust the product. I don't trust the leadership right now. I'm with you, Matt. So I keep scratching my head watching this chart, and I'm just like, I don't get it. But maybe that's not for me. Maybe somebody else gets it and they're making some money on that Tesla move. That's okay with me. There's plenty of other easy trades for me in the marketplace. Guys, go ahead.
Would you buy a company solely because you think it might go up because of short squeezes?
No, but if it broke what is that pivot? 360 on volume?
Ish.
I mean,
right there about 360.
I bought things, like that in the past on momentum. Yeah. I mean, if it was a swing trade, pure swing trade on momentum at a 360 break, try to target 380 or 3, I could see it.
I understand the technicals here. I understand why people are saying, okay, we got support holding at 327. You just reclaimed the intraday moving averages here. Let's drop this down very quickly. You just reclaimed those. You're got a very tight high base at the top there at 350. I could see somebody buying above 350 here.
Yeah, I could see it too.
Literally, I think it's a clean technical setup. And the breakout of 360, I think, would be a clean technical setup as well. I'd honestly believe it's my bias against Elon that does not allow me to properly trade Tesla. So it's just a stay away from me.
I think that's exactly where I'm at as well.
It doesn't mean that it's not a legit trade. It's just, for me, it's just a stay away.
Yeah.
I mean, how important is that if you have a bias that you can't overcome? Like, really, should you be trading that?
No, I think whenever you feel like you have an opinion of something that it's impacting your ability to analyze the stock, there's 6,000 publicly traded companies. Mm-hmm. I mean, don't feel the need to force your will on something when you have some emotion about it.
Mm-hmm. I think so. There's too many easy trades. There's other stocks you can analyze. You can keep the emotion out, reduce the complexity. I mean, keep it simple, right? The old KISS formula. Guys, rapid fire time. Got to do it. We do it every Tuesday. It's one of my favorite segments, one of our audience's favorite segments. We've been doing this one for years in our coaches show, Matt, and it's a great way to analyze it. What are you looking at here with Tesla?
I'm trying to understand why anybody likes this company. I get it back in 14 when they only saw a $2 loss, but they've compounded loss after loss after loss for 6 consecutive years as a negative 70 PE ratio, and is being led by a man that doesn't seem to be the visionary that he once was.
All right, I'll try my best to make one argument, even if it's soft. Their sales number year over year have been improving for 7 years in a row. 17, they had 11 billion in sales. In 18, they had 21 billion in sales. I think by the end of the year, they're probably going to see growth there as well. So maybe somebody sees a path.
Somehow, despite increasing revenue, they're seeing increasing loss on earnings per share.
Maybe they're reinvesting all of that into magic fairy dust to make those trucks fly. I don't know.
Maybe they're reinvesting all of that into Elon's pension fund.
Probably. By the way, he might be the best salesperson on the planet because he's been selling this dream for 20 years and they still make no money. So yeah, good. Touche, Elon. There's no question.
He's a great marketer.
Cody, set up rapid fire for me, if you will, young man. Come in and give us a nice little introduction. Let us know how it is. Bring some energy here and let the audience know what we're doing.
Well, let's see if I can get a better grade than last time. Because apparently I'm not good at pitching things in Tim's eyes. But anyways, what rapid fire is our quick trader's take on a technical analysis of a company you are looking at. So if you have a company out there that a ticker symbol that you are curious on, and you want to get a coach's take, a very quick, 5-10 second look at the chart, and we will give that to you. So if you have a stock like that, put it in the chat right now, and we're going to start running through these symbols as quickly as we can, which is why it's called rapid fire.
That was okay. We'll give that a B. Well, we'll give that a B grade. I'm going for an A grade next week, kid. I want to see
start with PAAS.
All right, we're going to start with Tim. I'm going to go left to right on my screen on Zoom. Keep it simple. Tim, Matt, Noah.
Can I just say one thing about Tesla very quickly? Yeah. Okay. Because it kind of goes to what Blake's question was. What would it take? It would take for the lies to stop and the manipulation to stop. Team Tackle was all over Tesla for 5 consecutive years from their IPO until Elon lied about his, Saudi Arabian buyout company at 420. So it'd have to take that.
I would need to have confidence in the leadership for sure.
It have to.
Yeah. All right. Here we are.
That
PAAS.
can happen, Tim.
Oh, yeah,
That
sure.
can happen. Absolutely.
I could come around.
Absolutely.
Not after that demonstration last week where he literally the windows broke and it made no sense. I still don't understand this chart, but we got to go through rapid fire. PAAS, Pan American Silver, is an interesting one. I'm glad this one got popped in there first. Adib, great to see you. I love this pullback, Matt. Bullish retracement into a doji sitting on the moving average. Beautiful chart setup, in my opinion. You need trigger confirmation and a set base trading plan. This is Step System 101 right here. There's no question. CGC, Matt, we looked at it yesterday, and
Trigger above 20 on Pan American, by the way.
Yeah, it's a good looking setup. Go on a short term watch list for
Stop
me.
loss under the 9, ride the 9. Yeah. It does seem like it wants to ride the 9 here.
CGC, Canopy Growth. We talked about that gap out yesterday. Had nice news. Red candle down 5% here today, but this is kind of what we expected. Matt, give me a read.
It's the same read as we had. Potential reversal pattern down a little bit today as the market was up 16% yesterday. It's testing the breakout channel right there at $20. If you break this down from an intraday perspective, you kind of see the breakout there of 19, reestablish that breakout channel at 20. It's kind of testing that. For me, 20 would have to hold.
Yeah, there's some short-term risk on that intraday. There's no question. KEYS, Noah. This one, Chris says, is this a bullish retracement?
Chris, you should take some training on that. And I'm just kidding, Chris, because I love Chris. I'm just teasing him. Chris, yeah, that's a pretty good clean bullish retracement. If you back that out to a weekly, it's going to look more textbook-like. So,
on the weekly, yes.
Yeah.
On the daily, no.
On the daily, it's just a messy retracement into a support zone, rising moving average. It's got all the conditions you'd want to see for a support resistance bounce near that 100 ballpark.
Mm-hmm.
But it needs to get back up. Evidence. I'd want it to break that 104. Like, I'd really like to see it take out that little mess it's created there the last couple of days.
I think it would have to get back above the 20 for me, that 105.26 right there. Yeah.
In a hot market, the retracements that have came underneath the 20 and between the 50 have not worked out very well.
Yeah. CGC, where I looked at ARWR, Cody.
AR what?
WR. Ooh.
Wow.
I've never analyzed this company.
Yeah, I don't know what this is, but it had quite the run over the past 3 months. That pop off of good earnings, obviously. You could definitely play this again with a new break above the old high. That's a lot of movement, though. I always get a little bit cautious whenever I see too much movement too quickly.
Pharmaceutical company.
From a short-term trade,
it's 2 years ago.
Mm-hmm. $6 billion market cap. So you got a mid cap size now because of the growth. And a lot of that is because it doubled this year. It would have been small cap even to start the year. Interest, obviously a beautiful chart. I mean, just incredibly parabolic. Cody, I'm with you on the analysis. Matt, when you see a stock you haven't traded before, that's a pharma company, drug manufacturer, and you see this beautiful technical setup, how do you approach that?
I wait for a shorting opportunity.
Yeah. Noah, these ones are high flyers, but some of the horror stories we've heard in the markets over the years have been when people buy stocks like this that they don't understand, right?
Tim, it might be a penny stock in 2 years from now.
Well, that without a plan. I mean, it's one of those things. If it's a drug, type company, you got to look at what they have in their portfolio. But is that all that money being driven by like that one drug and clinical phase 3 trial? Like that's the kicker.
And I think one of the problems with a stock like this, guys, and I don't want to cut you off, but I want to get your take on this, is there's complexity that the chart can't answer, right?
Yep.
That you'd have to dive into the numbers.
Yeah, I agree with that. Keep moving through here. Vulcan Materials, VMC, I'm back on my side of it. In true rapid fire, that's neutral. Moving on. Yeti, Matt, you get this one next. YETI.
Yeti. This might be another dirty, sexy money company.
I like the company. I like the product. I like the ROI on cover call type of stuff. It will be a candidate.
Set up here. Tough trade set up here. I mean, you got a short-term bullish retracement, but you just got a ton of overhead numbers. Oh man, with the neutrality we've seen, yeah, you can definitely get some sexy money out of it. Might be a little too sexy, honestly.
Yeah.
I don't see it. Stuff trade.
It'll be a candidate I will be submitting. We'll have to review it. I don't know if it'll make the list or not.
How is it
I like it.
sexy? I don't get that. What does too sexy mean, Matt?
Oh, because it's dirty because it's volatile. Okay.
So would that be too dirty, not too sexy?
Because on margin, you can get 10% ROI monthly. So it's stocks that you can do covered calls on, but do not have the fundamental criterias of the Tackle 25. So the Tackle 25 actually has 10 different fundamental criterias. It has volatility criterias as well. It has volume criterias as well. There is some obviously diversification principles that we apply to go on the Tackle 25. So Cody, you like baseball, right?
Absolutely.
Okay. So the Tackle 25 would be like the major leagues, and the dirty, sexy money list would be like double A ball.
Mm-hmm.
Okay.
There you go.
Any
I
man
was when I heard
any,
too sexy, I was like, because
it's dirty because it's volatile, but it's sexy because it's awesome money.
yeah, there's no doubt about it. I got to quickly put our foot on the gas here, Matt. I'm going to give you 5 in a row. Home Depot from Hero.
Oh, bearish retracement, riding the 9 on the downside here. And if you're looking at it, just if you remove the headline from the equation, that 9 looks fairly strong. Look for another downward movement in price for Home Depot.
Let's show them rapid fire old school here, Matt. Costco.
Costco, short-term neutrality, nothing to see here until it breaks 307 and 34 cents.
Earnings as well. CCK.
CCK failed retracement. Now it's breaking down out of the moving averages. Look for CCK to at least test 70. If it breaks 70, it could get ugly.
Disney,
love it. It's a great stock. There's no short-term trade here, though. This is a position covered call, long-term investment type.
/CL for Batman. We looked at it earlier, Batman, but just quick peek.
Batman, wait for the break of 60.
Yep. Grub,
bearish retracement, looking for breakdown. Look for 32 to be tested here. That could be a pretty decent little swing trade. Obviously, the gap down out of a negative earnings report retraces back up. It's reclaimed all the moving averages. Now you're just looking for a downward movement in price, maybe a breakdown out of 38.50 in that zone with the potential target of 35 initially, second target 32 with the ultimate hypothetical home run target of 30.
We're on a roll here, guys. Noah, you get 5 in a row now.
I what? Go on.
Right.
Low base breakdown.
Dad jokes are on Wednesday, Noah.
Oh, yeah. Sorry. My bad. That's a good low base. Take out 555. You got a short maybe, but
something's going on with that stock. I wouldn't touch it. Halliburton.
That's reversal. So you're bumping up into some resistance right now. You might have a clean break.
Square Hog and Starbucks, Matt.
Square's pretty neutral. I don't get a clean read on that. I don't see any great technical setups on it.
Hog,
I see a W. You might have you might have a bullish posture. It's neutral in context, but you do have a W pattern there.
Yeah, that's interesting. Starbucks, we already looked at a little bit. Nice reversal characteristics. Quick last couple here, Matt, and then we're done. GTT, CVET, and SE, and then we are out.
GTT?
Yeah. I don't know this stock.
No.
Yeah.
Reverse. Am I supposed to do this or?
I'm pitching them to you here.
Oh, okay. I reversal characteristics here, increasing volume on the reversal, overextended, wait for a high base, wait for some type of bullish retracement.
CVET,
CVET forming a high base off a reversal, positive price movement on their earnings, although from the looks of it, still pretty bad. Looking at a resistance level at $15, it would start for me. It's not a company I would trade, but if you do, it's got to start with a breakout of $15, which is really, really strong resistance here. Look at that level.
Yeah.
That breakout's legit.
That would be a legit breakout. And then you've got that nothingness up there, which we love. It would have a lot of room up to that next target. And then last one here, Matt, SE from our buddy Chris Couch.
Start with breakout of 39.
Yeah, I have to break that high side consolidation.
Hey, real quick, Tim, before you kind of send us out and do your little deal at the end of everything, This week, guys, I am going through the Tackle 25, Dirty Sexy Money list, Dividend Fireworks, Poor Boys Covered Call list, all those 4 primary lists that we have for the cash flow, side of the equation at Tackle Trading. If you have any suggestions on stocks that you think would be, a good Tackle 25 stock where you've enjoyed doing covered calls on it, or you've had that one stock like a Dirty Sexy Money list, like a Yeti or something along those lines, that is good. I'm going to be making a post in the clubhouse after we get done here. And if you want to shoot me a suggestion, just post it right underneath my post in the clubhouse.
I love it. And by the way, we got a lot of good feedback on the clubhouse post you did a couple of weeks ago as well on the coaches show. So guys, use that clubhouse. Make sure that you're dropping in there. In fact, I'm going to just drop the link in the chat for where that clubhouse is. If you haven't signed up for it yet, just pop in there, put your email in. It's kind of like, just a Facebook for traders, but only for Team Tackle members. So it's kind of nice. There's no political arguments, none of that, just trading talk, which is kind of a cool thing.
That's the one rule. No politics.
No politics, no fighting, no negativity is really the rule. No negativity. Great show here today, guys. As always, Tuesdays are fun. Tomorrow we got Fed meeting day, and obviously that can bring some volatility. Join us back here tomorrow, 12:30 p.m. Eastern Standard Time. One of the things I like to promote here in our halftime report is our pro membership. And we always offer people a 15-day trial. Come and join us. The membership's $97 a month after that, which is absolutely a steal on the value for what you get. Matt, we have nightly shows. We have weekend reports. We have all kinds of content for that $100, right?
You will not find a better value in the history of this industry for the content that the tackle trading coaches provide every week.
Yeah. And if you are a pro member, one of the best things you can do for me right now is just type in the chat Go Pro and let everybody else out there who's watching know that we've got a lot of great loyal pro members that are a part of our community.
I thought you said GoPro, and I had a PTSD.
I triggered you right there. I didn't mean to.
Yeah,
that was not intentional.
But we're sitting here talking about the Tackle 25, and you had to bring up GoPro?
Oh, no, Go Space Pro. Yeah, those GoPro cameras. C'est la vie, brother.
The cameras are awesome. The company's terrible.
They're not.
The cameras are awesome, but
yeah, they were pretty cool.
2015 wasn't very good to GoPro.
You can't hit them all, dude.
No, that one I did not get right.
Well, and the thing about it is, one thing I love about the Tackle 25 is we publish the results. We put it out there. We're very public about it. We keep it out there, and we don't change that list much through the year. It's designed as a cash flow list to work for the entire year, Matt. And we've had a great track record on it. Part of anybody's trading account, trading history, trading records, you're going to have a few GoPros.
I'm very proud of the performance of the Tackle 25 over the last 5 years. Yeah. I'm with you. And guys, other things real quick tonight, I'm actually going to be at the coaches show and be doing it with Coach Grant Larson. Come and join us. Yeah, we're going to have some fun. We're going to be running that nightly show tonight. Grant and I are going to be breaking down the markets and having some fun with it. Come and join me live. If you're a pro member, we want to make sure that we are promoting those nightly programs properly. Make sure you pop in. If you ever have any questions about it, getting in, how to find it, all that kind of stuff, team@tackletrading.com. It's a simple email. It's the best way to get a hold of us. Like, comment, share, get the word out there. We will see everybody tomorrow. Podcast.
Matt, we dropped that podcast last night. Now I'm glad
you dropped that podcast.
I enjoyed talking to Lane. Nice guy. Just a really cool guy. And I enjoyed the conversation we had where we answered the clubhouse questions, and we went through some of those as well. Podcast listener.
Our live reads were garbage, by the way.
We missed Mark.
You and I just talking about random stuff for 5 minutes when it's supposed to be a 90-second live read going into the next segment. Hey, I had a good laugh though.
I'm rusty. We're not good pitchmen, man.
No, we're not. No, we're not. We're terrible, actually.
Yeah, it is what it is. Just be ourselves. We had some fun with it. We enjoyed the podcast.
Download the podcast. We had a lot of fun on it.
Yep, 351, and we put those out every Monday. Let me ask everybody out there real quick, where do you listen to the podcast? Because I've been trying to track some data. I think I still use iTunes, Matt, because I have an iPhone. Do you listen to it through the website, or where do you listen to it?
Well, no, I Pod Cruncher. I have an app.
You do an app on your phone as well.
Oh, I that's the only way, in my opinion, to listen to podcasts. Is an app
Noah,
too.
what about you? Do you listen through the website? Do you go to?
I'm an Apple iPhone. Yeah, it's pretty
course you are.
straightforward there. Yep.
Yeah,
There's some
well,
really cool apps though that are free to download that you can subscribe to any podcast that you subscribe to.
Yep.
I think
All right, guys.
the iTunes one, like the iPhone just standard one, that might be the worst one of all of them.
It does the job. It
You mean
gives
there's a
good
better
audio.
experience out there? I could try. Huh.
I
Pod
know-
Cruncher. Try
yeah.
Pod Cruncher.
I might check it out. Yeah, for sure. All right, guys. We'll be back tomorrow. We'll see you guys. Good luck. We'll see you in the morning. Bye.